and I'm really excited to introduce Brad Cook, the CEO of Endeavour Silver. So Endeavour is a pure play precious metals producer in Mexico. They're highly experienced. They've been producing for about 15 years there now, and they have sector-leading beta to silver. So I'm going to pass it over to Brad just to chat about what they've been up to. The last time we caught up with him, I believe, was in June at the previous silver conference that we've done. So a lot of exciting things have happened since then. And so, Brad, if you want to take us through it.
Absolutely. Thank you, Victoria. Welcome, everybody, to this presentation on Endeavour Silver. Since June, we've had a spectacular run-up in the silver price, obviously run-ups in the silver stocks. And since September, a prolonged correction to consolidate that move. Specific to Endeavour, we completed our operational turnarounds and as a result had a really good year last year, notwithstanding the COVID pandemic. We actually released our financial results on March 1st. Look for that. But before I dive into the details on Endeavour and our presentation, I always like to start with an overview on silver. And it would be remiss of me not to start with the famous or infamous silver short squeeze, which unfortunately was not. So let's just be clear that that had all of the smell of a classic pump and dump carried out in full public view and had nothing to do with squeezing shorts in silver. Let me explain. It wasn't a silver short squeeze because it only lasted 3 days, and when it stopped with a crash. And in other words, in a silver squeeze, you typically have building pressure of people buying the stock to force shorts to cover, which causes a sharp spike run-up, kind of like GameStop. What we got, I think, was a blogger speculator posting on the Wednesday after the close of that week that the mother of all short squeezes was in silver, and that one should buy the silver ETF and $35 call options on silver, and it would force the silver shorts to cover. They had all of the Thursday, Friday, and that weekend to pump it up on Reddit, and on the Monday, obviously, we had a good move in silver and a spectacular move in the silver stocks, our own included, on the Thursday and the Friday, and it culminated with a huge run-up again on the Monday. And it all fell apart and gave it all back on the Tuesday. That's not a silver squeeze. That for me was somebody who did load up. So I'm presuming these are the bloggers, the leaders of maybe Wall Street bets, did load up on $35 call options. I checked the prices of those options on the Tuesday prior, and they were about 30 cents. And yet on the Monday peak, they were $1.65. So it was entirely possible to make 5 times your money in 3 days. If you were a leader of that pump and dump. But I presume they got out at the top and the whole thing fell apart on the Tuesday. So that's why it wasn't a short squeeze. It's not even feasible or even possible to squeeze silver shorts. And why, you might ask? Because there's a profound difference between naked shorts on a stock, where a shorter has to borrow the stock and sell it in the hopes of buying it back lower. And the silver shorts, where virtually all of the shorts, if you want to call them that, are simply hedges of physical bullion stored in vaults. Not shorts at all, and they're certainly not naked. Some people would argue that the bankers sitting on the silver are hypothecating the silver many times over, similar to fractional banking, like we deposit our cash in a bank and they lend it out several times over. And there is a small element of that in the silver business. But, there were some very large global banks find a lot of money in recent years for playing in the silver and gold markets for admittedly short-term trades and short-term manipulation. Specifically, I know Deutsche Bank got fined, and I think JP Morgan might have gotten hit as well. So they're pretty much out of the silver gold business. We've seen a big pullback from banks playing in the gold and silver business in recent years because of that. So why isn't it possible or feasible to squeeze the silver shorts? Because they're not naked, they're covered. And a banker who's in the business really only to collect fees, not to take a position long or short, typically will be long physical and short paper because of the nature of the silver supply. So that kind of leads us to the fundamentals on silver. You know, there's about 1 billion ounces traded annually in silver, and about 700 million ounces of the supply comes from new mine supply, balances scrap and recycling and whatnot, and sales from positions, bank positions, central bank positions. And fully 70% of the mine supply comes from non-silver miners, big global diversified copper, lead, zinc, and gold miners, who typically will sell forward their silver because it's a small byproduct of their main product. They'll remain unhedged on their main product and then just lock in their revenue stream from the byproduct silver in order to manage their revenue flows and their costs. So who is the counterparty if a big diversified global miner wants to sell forward their byproduct silver? Selling it forward months and in many cases years, 1, 2, 3 years. It's the bullion banks. And because they are agnostic to the direction of silver, they only want to collect their fees. When they go long physical, whether it's through delivery or through a future contract to deliver, they go short paper. And that's why there's such a large paper short on silver, so much larger relative to the physical position compared to any other metal. But that doesn't mean that the banks are playing games or manipulating silver. It simply means that they're the counterparty to big mining companies selling forward silver. And so when suppose somebody does try and squeeze silver, a new demand comes into the market. In the case of that event at the end of January, the squeeze was actually partly in the options market and partly on physical. You saw mints and coin dealers literally run out in hours because they weren't prepared for such a run on physical demand. Doesn't mean there's not silver out there to create more coins and bars. And the banks, who are the counterparties to these physical longs holding paper shorts, if the silver price, if the silver price goes up, they're the main beneficiary because they hold the physical. So they can roll out of their hedge position and reset it higher, and roll out of it and reset it higher. And they can do that all the way to $1,000 an ounce and still be making money. That's why it's not possible or feasible to squeeze the shorts. So I thought I'd start there because there's a lot of misinformation in the internet on how the silver market actually works. And because of this imbalance between physical longs and paper shorts, primarily due to the forward sales of big miners, there's always going to be this kind of disconnect. And it means that silver is more volatile than gold, which can be taken in a bull market very positively. So let's move from there to the fundamentals. I touched on supply. So why don't we go to demand? You know, we saw a silver bottom in 2015 and effectively double bottom again in 2018. Silver supply actually peaked in 2015 and has been falling every year since. So we've now had 5 consecutive years of declining total supply and declining mine supply. And again, it goes to where does silver come from? In a prolonged commodity bear market for copper, lead, zinc, and gold, the big diversified miners didn't invest to explore and develop new copper, lead, zinc, and gold mines. And so there's a shortfall of byproduct silver. Has been for 5 years, and it's reasonable to presume that because of the timelines needed to build these new mines, copper, lead, zinc, and gold mines, there's still several years of declining supply to come. So very strong fundamentals on the supply side. The only offset of that is that the higher the prices go, the more silverware and silver coins and bars come out and add to the non-mine supply. If we turn our attention to demand, fully half of all silver demand comes from industry. And that includes solar and EVs, but primarily electronic. An additional 20% is jewelry, another 20% is investment, as in ETFs, coins, and bars, and the rest is odds and sods. So where are we at on the demand side? Well, we've seen from an investment side a complete absence, in fact, a decline of investment demand from 2012 all the way to 2018. And so the biggest silver ETF, SLV, kind of flatlined at about 650 million ounces of silver in holdings for several years during the bear market. Interestingly enough, very different from the gold ETF, because the gold ETF was basically for sale. It was hot money, and that hot money came in 2010, 11, 12, and it definitely exited the gold sector, 13, 14, 15, 16. So the gold holdings of the gold ETF actually fell precipitously, whereas the silver holdings, interestingly enough, didn't fall at all. So very different investors in silver compared to gold. Not hot money at all, long-term money. Where was I going with that? Oh, yeah. So the silver investment demand has spiked in the last 2 years. In fact, just in the last 12 months, we've seen total holdings in ETFs worldwide go from about 650 million ounces to 1.05 billion. So a very sharp increase in silver demand from the ETFs. We saw a sharp quadrupling of coin and bar demand last year in the US alone. And of course, it's early yet this year, but I'm sure the run-up in physical demand in January, February this year means another record year ahead of us in terms of coin and bar demand. Turning our attention to industrial, silver's a green metal. We've had 3 disruptive technologies in my history in silver since 2000. The emergence of silver films and pastes on electronic circuits, the explosion of electronic goods, and the emergence of China as a consuming nation really caused the 2000 to 2008 run-up in silver and gold, primarily silver. Of course, the correction in 2008. And then there was a second run-up, which was really due to solar photovoltaic panels taking over as the fastest growing sector of industrial demand. And last year, photovoltaics took almost 100 million ounces off of the silver market. If you look at a 10-year forecast, they're forecast to double to 200 million ounces by 2030. So still a fast-growing component of industrial demand. The third disruptive technology, so first disruptive technology was electronics and the emergence of China. Second one was the emergence of solar power and photovoltaics. The third one, nobody thinks of silver when they talk about the electric vehicle or the hybrid vehicle. And yet you cannot have EVs without silver. And they're electric cars after all. Every electronic circuit has a silver paste or a silver nano silver coating. And while these cars don't use a lot of silver, in conventional cars, because they are also to a certain extent digital, there's about an ounce of silver that goes into a conventional combustion engine car. And there's about 2 ounces goes into an EV. And if you believe any of the EV forecasts, there's another 100 million ounces of new demand by 2030. So where's the silver going to come from? I mean, silver is really setting up for a perfect storm, falling supply and sharply rising both industrial demand and investment demand. So like I said, setting up for a perfect storm. Silver is always normally more volatile than gold anyway. And I think we're very well positioned, Endeavour is, to allow our shareholders to participate fully in this silver bull market. So with that, why don't I turn now to our presentation. I'll just go to full screen here. And I will be making some forward-looking statements today, so you are duly cautioned. Some quickie highlights. We are considered to be a mid-tier producer of silver and gold in Mexico. We own and operate 3 high-grade underground silver gold mines in Mexico. There's really 4 key catalysts to drive value for our shareholders, both short and long term. We've been very successful in the last 2 years at optimizing our operations, reducing our cash costs, and boosting our free cash flow. You'll see that evidence of that in our March 1st financials release. Perhaps the most obvious catalyst is that Endeavour has the best organic growth profile in the entire silver mining sector, with not 1, but 2 new discoveries awaiting development to drive growth. Thirdly, we have a certain expertise in discovering new ore bodies. Every one of the ore bodies we've found and developed, every one of the mines that we've put into production were as a result of success stories of our own exploration team, virgin discoveries made by our existing group. And that is in our DNA. We live and die by the drill bit. It's what allowed us to build this company from a shell to 3 operating mines and 2 pending new development projects. And last but not least, we do actually pull the trigger from time to time on mergers and acquisitions. That's where we got our operating mines and our key development assets, but we purchased them for pennies on the dollar and added value through the exploration programs. And that's what we do. And compare us to the rest of the peers in the silver group, we're the only one whose focus is that. Everybody does brownfields exploration to replace reserves. But virtually none of our peers focus on grassroots discoveries to build out a multi-year, in fact, multi-decade profile. Last but not least, because we're only a precious metals producer, we don't produce any base metals, we do have a sector-leading leverage, or beta, of our share price to the silver price. So, headquartered in Vancouver, BC, all of our core assets in Mexico, a portfolio of 3 world-class projects, exploration projects in Chile, 2,200 people currently work for the company. Some recent highlights: we just came off our strongest quarter of production in the last 2 years, producing 2.1 million ounces of silver equivalents, up 21% year on year. We actually met last year's production guidance of 6.5 million ounces silver equivalents, the only equivalent, by the way, being gold. Notwithstanding a 2-month government-mandated suspension of our mines due to the COVID pandemic. We have recently agreed to sell a dormant non-core asset, the El Cubo mine, to a junior company, Vangold, for $15 million, plus additional contingent payments. That should close this quarter. Even though we can look at improved financial performance to our Q3 financials, cash costs down 68%, all-in sustaining costs down 19%, operating cash flow up 400%. And at the end of the third quarter, our cash was at about $45 million, working cap $54 million. Suffice to say that having recorded our best production quarter in 2 years, when we release our financials on March 1st, you'll be able to do the math. Let's leave it at that. Very successful last year in our exploration drilling programs. We replaced reserves and resources. I think our reserves are up 11%. And we enjoyed resource and reserve increases, primarily at Guanacevi due to the high-grade El Curso discovery. So the most recently updated reserves and resources, 86.3 million ounces of silver equivalents proven and probable, 44 million ounces silver equivalents measured and indicated, 87 million ounces silver equivalents. In the charts right, we're about a 50-50 silver gold player last year by revenue, and we expect this about the same this year. Interestingly enough, our development projects will skew us once again more strongly towards silver. And Guanacevi is our largest mine. Our outlook for this year, we're forecasting slightly higher production, something at around 6.6 million ounces of silver equivalent production. Cash flow will be higher, obviously, thanks to the higher metal prices and lower costs. From last year, our costs are drifting higher, though, this year because we're basically more profitable. So we're paying higher royalty payments and higher mining duties to the government. That's primarily due to the jump in production and costs at Guanacevi. Our first and largest development project, Terronera, is currently the subject of a full feasibility study expected mid-year. That should facilitate a development decision by the board in August. Our second development project, Parral, was dormant last year, but we've revved up a big drilling program to expand resources on Parral this year. And when it comes to new world-class discoveries, we have this portfolio in northern Chile. We're currently drilling one project called Paloma with strong discovery potential. So let's turn our attention now to a quick tour of the assets. The Guanacevi mine is our first mine, acquired in 2004. It's our largest silver mine at more than 3 million ounces a year. And it's the only mine we produce doré bars and ultimately refine them into pure bullion. That actually gives us the flexibility to sell or not sell our product on a weekly basis. And yet Guanacevi was a serious money loser in 2017, 18, 19, and we literally had to roll up our sleeves and complete a 2-year operational turnaround at Guanacevi. As a result of the completion of that operational turnaround, we saw production last year up 49%. Our grades were up 32%. The throughput to the plant was up 15%. You can see all those in the chart left, with the blue bars being the tons delivered from the mine to the plant, and the line being the grades per ton. All of that was as a result of our increased productivity and improved work culture. And of course, chart right, higher grades and higher tons means more ounces and lower costs. There's the costs. Moving to our second mine, Bolanitos, acquired in 2007. It, for 10 years, was our cash cow. We pulled over $200 million of free cash flow out of Bolanitos from 2009 to 2018. And yet, like Guanacevi, it fell on hard times and lost money in 2019. So we had to launch an operational turnaround here at Bolanitos as well. Completed at year end. And our year-on-year production was up 46%, throughput up 31%, gold grades and recoveries highest in 3 years. And of course, the impact on our production, chart right, and the impact on our costs, chart right. By the way, we typically report our cash costs and all-in costs per ounce of silver produced, net of the gold byproduct credit. We take gold as a credit against the cost to produce the silver. And that's why at Bolanitos, whether we produce more gold by value than silver, the costs are significantly negative. Turning our attention to our newest and smallest and most gold-rich mine, the Compas mine in Zacatecas, was brought to production 2 years ago. And it's our most boring mine. Year-on-year production was up 9%, throughput was up 3%, gold grades and recoveries up, silver grades and recoveries down. All in all, it's basically a steady state operation. And you can see that from the quarterly production. And the costs are a bit lumpy because of the big gold credit. So all three mines generating significant positive cash flow. We don't need $26 silver to make money. We are guiding our cash costs this year in the $8 to $10 range, and our all-in costs in the $19 range. But $4 of that is the increase royalty payments and mining duties to the government. Let's move now to our development pipeline. First up is our fully permitted Terronera project in Jalisco State. Terronera truly has large, low-cost mine potential. It's going to be our next core asset, and when it's up and running, it will effectively double our production at half our costs. The district-scale opportunity, we've now controlled 20,000 hectares, including 2 new blocks added late last year, shown in the green on the map, and covering several historically undrilled ore-bearing vein systems. We're in the middle of a final feasibility study at Terronera, but we completed a final pre-feasibility study last summer with very robust economics. We envisage effectively a 6 million ounce per year silver equivalent mine for a minimum of 10 years off of an 80 million ounce resource base, 66 million ounces of which are proven and probable reserves. In 2 discoveries, the Terronera and La Luz, shown in stars on the map. What makes Terronera special? Well, at significantly lower prices, last year we used $16 silver and $1,400 gold. We were able to generate a $137 million after-tax net present value at a 30% internal rate of return, again after tax, with a 2.7-year payback of capital invested, about $100 million estimated for the capital in last year's study. What really sets this project apart, though, is that it's about a 60-40 silver-gold split, and the gold pays for everything, so the cash costs are zero. Even on an all-in sustaining cost basis, life of mine operating costs, exploration costs, capital investments, G&A costs, royalties and mining duties. We expect to produce silver at Terronera at an all-in cost of $2.10 per ounce. Pretty impressive performance, and the reason is very simple. This ore body is shallower, thicker, and richer than all the other ones we've found, and therefore it drives better economics. So there you see the PFS base case, but if you go to approximately today's prices on the far right, you can see that our financial metrics multiply. I mean, the NPV rises 2.5-fold to $350 million. The IRR more than doubles to 65%. Payback period crumbles to barely 1 year. And the annual average after-tax free cash flow jumps to $57 million. And this mine, once it's up and running, will literally be our new cash cow. There's our 10-year production forecast from last year's study with the silver production in the silver bars, the gold production, silver equivalents in the gold bars, and the red dots being the silver equivalent grade per ton delivered to the plant. You can see we're going to start off darn close to 500 grams per ton, which is top decile in the entire sector. And even at the end of the 10-year mine life, we're at 350 grams. We're significantly higher, like top quartile in the entire silver sector. More upside opportunities to be captured, both through our programs this year and the feasibility study. We've already expanded the property footprint, adding 5,000 hectares last year. We resumed, after a 2-year break, exploration drilling last September to test new veins and expand the resources. We're now evaluating the feasibility study, the potential to expand the 1,500-ton conceptual plant to as much as 2,000 tons per day. With more geotech analysis, we can use cheaper long-hole mining to reduce the op costs. We're evaluating the costs of truck haulage and ventilation requirements, looking at electric equipment underground to reduce our carbon footprint, tweaking the plant performance, and evaluating belt conveyors to take the tailings from the plant down to the tailings facility. So lots going on. This year we have a $9 million capital budget in the first half of the year so that we can start ordering long lead item equipment. And we've actually already taken possession of and paid for the big 1,500-ton ball mill for the plant. It's sitting in a warehouse in Puerto Vallarta. Next steps at Terronera: complete the engineering, procurement, construction, and management process by appointing a contractor, continuing to build out our project team. Exploration drilling is underway. We've already amended and extended some government permits. It's fully permitted for construction. As I mentioned, procurement's underway for the mine and plant. We're looking at the feasibility study mid-year, board approval in August. And my job, along with our CFO, Dan Dixon, between now and then, is to secure our debt financing for the project. So I won't say a whole lot about our second discovery at Parral. It's another famous historic district in southern Chihuahua. We have a 42 million ounce resource base there from 4 historic producing mines: Veta Colorada, San Patricio, Palmilla, and Cometa. Veta Colorada is the bigger one. And we hope to grow our resource base here with a $2 million exploration program in 2021. Last but not least, Chile. A lot of people ask, you're a specialist in these high-grade underground vein mines in Mexico. What are you doing in northern Chile looking for bulk low-grade? Well, I'll tell you, there's a rationale behind this. Years ago in the bear market, we asked ourselves how we could sustain our business model, and it was getting tougher and tougher for us to find high-grade underground vein opportunities in Mexico. And in a bear market, we decided to ask ourselves, where are the biggest silver deposits to be found worldwide? And historically, some of the biggest open pits were in Bolivia, the famous Bolivian silver belt. And we're not going to Bolivia, thank you very much. But that belt extends into northern Chile and Argentina. And in Argentina, where you have roads and villages, there's actually 2 operating open pit silver mines, extension of the Bolivian silver belt, Chinchillas and Purquitas. But if you just cross the border into Chile, there's virtually no roads. There's certainly no villages. And it was wide open for staking. We literally staked 3 highly prospective and massive alteration zones that you can see in the photographs here. The one with the red pickup, Paloma, is a 3 by 2 kilometer high sulfidation epithermal alteration system. We're currently drilling it. And we're looking for a multi-million ounce gold equivalent, gold plus silver, open pit bulk tonnage opportunity. World-class target. Lower left with the horse is our 6 by 8 kilometer long massive porphyry copper gold system. We've done enough work at Cerro Marquez to indicate that there's a porphyry present, but we're not a copper producer. So we're currently actually shopping for a copper partner on that one. And last but not least, upper right with the alpaca, that's our truest extension of the Bolivian silver belt. It's tucked into the 3-country corner of Bolivia, Chile, Argentina on the Chilean side. And it's a 8 by 3 kilometer alteration system. And we have a drill ready target there, bulk tonnage, open pit, just in the middle of permitting the drill program for hopefully later this year. So, Chile, world-class exploration targets. Cerro Marquez, low tonnage porphyry copper gold. Paloma, high sulfidation epithermal gold silver. And Aida, low sulfidation epithermal silver lead zinc. All of that adds up to a sector-leading organic growth strategy. We have sector-best leverage to growing cash flow, thanks to our operations and our falling costs. We have sector-best leverage to new production and cash flow due to not one but two development projects in Mexico, one of which, Terronera, is fully permitted and ready for development. And last but not least, we have, I think, sector-leading exposure to world-class new discoveries, thanks to our Chilean assets. 157 million shares out. Recent prices are actually a little higher than this. We're up in the 550 range US, so about an 850 US market cap. What's that? 1.2 Canadian, and good daily liquidity, 6 million shares a day. If you $6.50 stock times 6, so you're talking $40 million in daily volume. We're listed on the big board in Toronto, EDR, and the big board on the New York Stock Exchange, EXK. I've touched on our working cap and cash positions at the end of September, both sharply higher at year end. We have one major shareholder, the Van Eck GDXJ Index Fund, holds about 5 to 6% of the stock, and we are told that the GDX, the bigger index, we qualify for the GDX and may actually be appointed to the GDX coming up shortly. We don't have confirmation of that yet, but it looks like that we do qualify. We do have one strategic shareholder. The world's largest silver mining company, Fresnillo PLC, has a 2% toehold in Endeavour. 10 analysts cover the stock, and again, we have a sector-leading beta to silver. So going back to the catalysts, how do we create value for our shareholders? Well, we're going to continue to optimize our operations and boost our free cash flow. By advancing Terronera, we will become the fastest growing silver miner in the sector. And we expect cash flow from Terronera by late 2023. It's about a 2-year construction and commissioning process. We hope to start in September this year. We have, year after year after year, been successful at replacing our reserves through brownfields exploration drilling. And of course, we're elephant hunting in Chile, going after a world-class discovery. We do try and grow from time to time through M&A. Nothing in the hopper at this time, but we're always active. So why invest in Endeavour? Well, we're basically a mid-tier silver producer run by an experienced management team who simply through developing our existing organic pipeline of development projects should become the next senior producer of silver in the group. We have a strong balance sheet, no long-term debt, and we're a pure silver gold player. Thank you very much.
Thank you for that. And thanks for the silver update at the beginning. I always find it helpful just to revisit the fundamentals of the industry, especially after the move that we've had in silver. Everyone almost wants to take inventory of, where we're at and kind of where it's going. So it's nice to hear.
Yeah, and you can, even if you don't know the fundamentals, all you have to do is look at the stubborn resistance of silver to go down when gold is going down. It's telling you something.
Right. So I'm going to kick off the Q&A, and then I want to remind everyone that there's a Q&A box at the bottom of the screen. So if you do have any questions, you can just type your questions in there, and then we'll get to them. So I just wanted to start with your producing assets, and you talk about, living and dying by the drill bit and replacing your reserves through that. So how many opportunities do you see left, and what are you guys modeling for mine life at the assets currently producing?
Well, remarkably, at both Guanacevi and to a lesser extent Bolanitos, we were able to hit the reset button through new discoveries and the development of new ore bodies. So when I mentioned that both Guanacevi and Bolanitos had hit hard times in recent years, that was because we really overstayed our welcome in the original discoveries from 2004 to 2007. And when we started mining them, they were shallower, thicker, and mature. And in recent years, they became deeper and narrower and lower grade. And with a lower and lower metal price in the bear market, we went from profits to losses. So it was painful. Even though we undertook massive management changes to create higher productivity at our mines, we also had to close those old mines and open up new ones. And thankfully, we had new discoveries. We make new brownfields discoveries almost annually. And they kind of got stuck in the permitting process in 2017-18, and we got them up and running last year, and 2019-2020. So that was really the key. Can we keep doing that? Well, we've been at Guanacevi since 2004, started production in January of 2005. We hit the reset button last year, and we now have at least 5 years of resources ahead of us, and we haven't drilled out the new discoveries yet. So, we've been there 16 years. We got 5 more coming, and it might be 10. At Bolanitos, the numbers are a bit smaller. We've been in Bolanitos for 13 years. We've got a runway of probably 3 years of resources, up from 1. But we continue to make new discoveries last year at the Miadito and San Bernabe veins. This year, we're actually developing a new one called Belen. The one that's on the short string right now in terms of mine life is Compas. It never had a long mine life. We did make some discoveries last year. They are not in this year's mine plan. We're obviously doing that evaluation work now to see if we can extend the life at Compas. Does that answer the question?
Yeah, no, that's helpful. Thank you. And then you mentioned the permitting process too, in terms of getting this stuff online. So how has it been operating in Mexico during COVID with the permitting process and just staying, ahead of that?
In Mexico, everything's faster and easier the farther north you get. So Guanacevi is in the Durango state, far north. So our annual exploration and development permits are issued very quickly. The Bolanitos and El Compas are kind of in the north central part of the country, so they're multi-month efforts. And there's really not been a big impact of COVID on the mine permits or exploration permits in north and central Mexico. Terronera got hit by the change in government, basically. The election of a socialist regime 2 years ago really stalled out our final permits on Terronera, and we got them a year and a half ago. But that was really the only delay that we experienced was, and what happens in Mexico is that when there's a new regime, typically all the senior bureaucrats get fired and replaced by people who don't know what they're doing. Don't quote me on that. So we had to literally educate the Jalisco state officials, environmental officials, before we could get our final permit.
Okay, I've had a few questions come in just on your all-in sustaining costs. So one was just how much they're going to increase due to the increase in royalty payments. And then the second, just asking if you wouldn't mind repeating your all-in sustaining costs for your 3 producing mines.
Let me go back to the presentation for costs. And so you'll see here our Q4, well, we didn't have Q4 then. Cash costs, Q3 2020, Guanacevi, 964. And all-in sustaining costs were up around the $20 range, as I recall.
Okay.
Bolanitos, cash costs Q3 minus $40. All-in costs were I think plus 10. So still well in the money. And Compas, cash costs were basically 0, and all-in costs were, I think, around 20. So that was Q3 last year. And was that it, or was there something else in your question?
The second. So I was kind of combining 2 questions together. They were both around the cost. So the second one was just how much are your all-in sustaining costs going to increase due to the royalty increases?
Right. So because we did hit the reset button and develop a new discovery called El Curso, the main jump in royalties is actually that ore body at Guanacevi. So fully, I think $3 an ounce in the all-in sustaining cost is thanks to that discovery. It's got a big royalty on it. The other buck is the rising, effectively taxes. They're called mining duties in Mexico due to our higher profitability the more money we make, the more tax we pay.
Right. Okay. And then, so moving on. So just a question that had come in on Terronera. So as you start to, work on the feasibility for Terronera and it gets closer to coming into production or construction, what do you think the biggest hurdles are going to be to getting this project online, or do you worry about anything with this?
Anybody who's developed a new mine in the mining business, their number one overarching concern is to make sure you deliver on time, on budget. And we hope to start work in September. And we're in the middle of a feasibility study now, so we're trying to make sure that our operating team is involved in this final stage of the feasibility study, so that when our development team gets to work, the operating team knows what the parameters are that they're going to be handed in 2 years' time.
Right. And then, so I guess the catalyst that the market should be watching for in terms of Terronera to make sure that it's progressing as planned.
Yeah, so as an example, when we did a complete rebuild of our El Cubo mine back in 2012, that was a $69 million, 18-month exercise. And with 8 weeks to go, we were 2 or 3 weeks behind on electrical and plumbing in the plant. Thankfully, our electrical and plumbing contractor was based not far away in Guadalajara, and we basically said, "Look, you gotta do this, or you're not meeting the contract specs." And they literally brought another 100 plumbers and electricians within a week, and we got it done on time, on budget. So it is possible, but that's the main risk. The other thing, obviously, uppermost in my mind is we do want to finance the capital to build the project with a traditional kind of 65-35 debt equity split. So we're looking for debt. We've been looking for some time. We've found some term sheets. We just have to make some decisions in the next 3 months.
Right. Another question that's come in from the audience is asking how you're going to use the $15 million from El Cubo.
Oh, wow.
You're probably pronouncing that so wrong. I apologize. I'm the worst at pronouncing anything. So that's me.
Yeah, El Cubo. Cubo is actually the Spanish word for the bucket that goes down the shaft to pick up the ore and bring it back to surface. And El Cubo, the historic mine, actually had shafts. We developed ramps, which you could drive equipment down into. El Cubo was a core asset from 2012 to 2019 when we closed it at the end of the year. And we've sold it now for, I think, a significant compensation. The buyer obviously thinks they can get it back up and running at a much smaller output. It was operating at 1,500 tons per day for Endeavour, and I think the buyer is thinking much smaller. And of course, smaller means it was not a core asset for Endeavour. So we decided it was a better move for us to part with the asset. And what will we do with the money? We'll simply add it to our working capital. And obviously, we've got not only Terronera coming, but we've got Peral right on the tail of Terronera. And cash is good. Cash is king.
Okay. Another question that had come in earlier was just in regards to the turnarounds that you guys completed at Guanacevi and Bolanitos. So it looks like you guys have significantly improved your production profiles there. So what were the biggest learnings that you guys kind of undertook during that process?
Very good question. So I said we overstayed our welcome in the original ore bodies. We did that because with our shrinking revenues and shrinking cash flow and shrinking earnings and ultimately losses, it meant that we couldn't spend what we felt we should spend to maintain the mines. You have long-term plans for equipment replacement, equipment maintenance, even personnel promotions and whatnot. And so our operational turnarounds really were a recognition that we hadn't kept up with our long-term plan. And to do that, we had to accelerate. And what did we accelerate? We accelerated the development of new ore bodies, the replacement of certain site management people with better management people, the replacement of certain contractors with better contractors, the replacement of our mining methods in some places with cheaper methods, the replacement of our mining equipment with new equipment, the replacement of our safety policy with much more hands-on safety policy, because safety equals productivity, and they go hand in hand. So it wasn't any one thing. The operational turnaround was basically a scorched earth. Let's look at everything to see how we can improve these mines. At the same time, we were developing new ore bodies.
Okay. And then I guess too, so just, given that process and given, previously there were a few challenging years, however, now it looks like you guys have really turned the corner and you've refocused and you've got all that behind you. What would you want to leave investors with to tell them, going forward in terms of making an investment in Endeavour?
Well, we had headwinds for several years. The metal prices obviously were falling. Our own cash flow was falling. Then our operational performance fell. And now everything's going in the right direction. So I think the main takeaway is that we want and need to use this time, which is still relatively early in the bull market, to grow the business. And that means not only developing Terronera and then Peral, but replacing them in the pipeline, either through exploration discoveries, Chile, for instance, or through M&A, or both. And in that way, we're not only doing what we've historically done and have proven that we're very good at, I think we have the clearest path to growth in the sector.
Okay. Those are all of the questions that have come in. So are there any last words that you would like to leave the audience with?
Yeah, we've got lots on the go, and we're back having fun and making money. Come join us.
Okay. Thank you so much. And thanks everyone for joining us. And we'll chat soon.
Thank you.